Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at our top stories for the week. The gold price has cooled since making a new all-time high at the start of the week, but it remained elevated ahead of the latest American non-farm payroll data and in the lead-up to the U.S. Federal Reserve's next meeting, which is set to run from December 12th to 13th. For investors, the key question right now is whether the yellow metal will continue rising or make a retreat. Opinions vary, but I heard recently from two experts who aren't so sure that gold is set to break higher, at least in the near term. Let's take a look at how David Morgan of the Morgan Report explained it.
And I gave him the Morgan rule, which set out a line that the gold has to achieve that price, above that price. Then it has to maintain it for 3 days in a row. And it also needs to be on above average volume. And if that occurs, then we are about 80% assured that it is a break. So, we'll see. I lean toward, unfortunately, I think it's going to come down again, but I could be wrong. And
Chris Vermeulen of thetechnicaltraders.com takes a charts-based approach, and he sees 2089 as a key level for gold. Here's what he had to say.
When a trade is crowded, meaning everyone is buying it or everyone is selling it, everybody's doing the same thing, it's typically an emotional turning point in the market. And of course, we have seen since then, gold has been selling off and the volume keeps getting higher and higher in terms of the selling pressure. So it is not a very bullish sign from a short-term standpoint for gold, what's been going on. So this really shows how a technical level, when broken, triggers all kinds of orders and emotions for people to pile in and have to do something, and how the market has a way of kind of negating that move.
It's worth noting that while both David and Chris don't necessarily see gold rising higher right now, they're both bullish in the long term. I'll leave the links to the full interviews with both of them in the video description so you can check them out. Before we wrap up, I want to take a quick look at uranium. The sector continues to generate news at a quick pace, and we're going to run through a few bullet points. First, the U.S. House of Representatives is set to vote next week on legislation that would ban imports of enriched uranium from Russia. Called the Prohibiting Russian Uranium Imports Act, it would bar Russian uranium imports 90 days after enactment, although it would allow a temporary waiver until January 2028. It will need a 2/3 majority to pass, and we'll be watching closely to see what happens. Uranium has also been making headlines since COP28, the UN's climate change conference. At the event, over 20 countries announced what they're calling a global aspirational goal to triple global nuclear energy capacity by 2050. Prices for uranium have been rising on the back of growing demand and tight supply, and the COP28 statement further bolsters the industry's bullish outlook. Finally, uranium M&A activity heated up this week with Atha Energy announcing a proposed acquisition of 93 Energy and Latitude Uranium. The companies say the deal will create Canada's largest uranium exploration portfolio, with exposure to 3 key uranium jurisdictions in the country. The arrangement is subject to shareholder and other approvals, and Atha is planning to raise about $14 million in conjunction. Against that backdrop, the uranium spot price remains above $80 per pound. That's all for this week. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.